Hey guys, John here and Forrest with ABODE Real Estate Group, back with your monthly market update. As always, thanks for sticking with us. We hope you find these videos really valuable. And this month we're going to quickly jump into the interest rate announcement and also just kind of what we're seeing out there in the market.
Yeah, so I think as everybody saw the other day that the interest rate was just flat, no up, no down, no changes. So I was kind of on the fence what they were going to do. It kind of makes sense to hold it at this point with the kind of global uncertainty and the way the markets are reacting to Trump's tariffs and the big shifts that we've seen in the stock and bond market and stuff like that. Kind of wonky out there right now, so I think things are just going to kind of cruise along at the same pace they have been. The bond market actually went up a little bit, so we could potentially see fixed rates starting to climb over the next little while a little bit. And again, that just ties into kind of the total uncertainty with what is happening down in the mighty US of A there. So yeah.
It's a bit like when the interest rates first started going up, we were kind of in uncharted waters. We were like, what's going to happen? No one really knows. And obviously, with hindsight, looking back, stuff happened and we dealt with it. It's kind of a similar thing right now. We don't really know. Obviously, no one knows. Probably no one in the cabinet in the US, not even Trump himself, knows exactly what's going to happen with tariffs long term. It could be a negotiation tactic. It could be a bit of leverage. It could just be a kind of new way of dealing with international trade and US tax system.
A bit of posturing, perhaps.
Probably a lot. I mean, the guy's a reality TV guy above everything, right? So I don't know. I think it's adding turbulence to everything, right? And that's obviously why you had the stock market go down and way up again. Not back to where it was by any means though. And the bond market's reacted. I think a lot of people have liquidated and put into the bond market, which has obviously pushed up bond yields, and therefore that's kind of how the fixed rates in Canada are priced. So if the Canada 5-year bond is trending upwards, going up, I think about 30 or 40 basis points in a week, which is absolutely crazy. It's crazy volatility. You're going to see fixed rates go up a little bit. So right now, variable I think is low fours-ish. Fixed rates, they were kind of in the high threes, low fours. You can probably see them all pushing into the fours now. But the reality is not much change in the rates.
Yeah, not much change there. And then kind of to add to that factor, locally here in Canada, we've got our own kind of uncertainty with a big election coming up and a lot of political posturing and kind of just a whole unknown floating about here as well. So it's kind of a bit of a strange time for everything, and including real estate.
I was talking to a realtor the other day at the gym, actually, and he was saying that he's been doing this for 16 years, so a little longer than us. And he was saying that, he always sees a huge kind of pullback in elections and then, a release after the elections. But
yeah, it's the old everyone is waiting to see what's going to happen.
I don't see that.
Yeah.
I don't know. I've never really bought into that. Maybe I'm wrong. I don't know. But I just don't think the election, especially when you've got two candidates, like basically it's a two-horse race, Carney and Poilievre, not massively wide apart on policy like previous elections. It is an important one though. It's obviously no mistake that the Liberals have been a disaster the last 10 years, especially the last 5. So I don't know. We'll see. But I think that I think what we're seeing right now, like compared to March, is a bit more activity.
Yeah, it definitely feels a bit more active. We've been quite busy, but I say busy because we're doing a lot of stuff, but like deals aren't really happening as fast as we think they should be. But I mean, again, we're here for our clients, so like we're moving at their paces. It seems a lot of people are getting ready or wanting to do something or trying to do something, but there's just no urgency, which is fine. It's not really the market for urgency, but again, it's just a lot of people making a move from a condo to a townhouse to a detached. There's not a lot of condo buyers out there. The condo inventory is way up in lots of areas.
It's climbing
a lot.
If you look at like the hot, like the kind of transit hubs with lots of towers, places like Surrey Central, Brentwood, Metrotown, these areas. If you look at like the line, the inventory for the last like year, or since this, say the last year. Obviously, there's a little dip over Christmas, but it's pretty much just gone way up. And I actually looked this morning, ground zero of all this is definitely Surrey Central. Surrey Central, there's currently condos and townhomes listed right now in Surrey, not South Surrey, just North Surrey, north of Highway 10, there is almost 1,600 condo units listed for sale right now in Surrey.
That's significant.
And every month we're looking at about 200 sales. So their sales ratio is way into single digits.
They've got almost 10 months of inventory then.
I think more, almost 12 to 15 actually.
Jeez.
Yeah, so and I would guarantee if you look at the condo towers, like we said before, probably 70% of them are tenanted, right, or vacant because tenants moved out. So this is what's happening. We've been commenting on this for a long time.
I think a lot of, sorry to interrupt, but a lot of people that are shopping right now, especially in the detached market, I think a lot of the inventory that's on the market right now is pretty overpriced, anywhere from 50 to 100 to 150 grand for some things in some areas, because they're basing things on pricing from 6, 7, 8 months ago. So, I mean, I think that is contributing a little bit to why things seem a bit slower. People are taking their time a lot more. It's taking a lot longer to put deals together because the negotiations are taking a lot longer, and there's just a lot more choice. So people are out there looking at everything that they can see before making a decision.
Exactly. So as a buyer, if your first hurdle is, do I feel secure enough in my job with all these tariffs and potential recession looming to go and buy a place and spend $1.5 million? That's the first question. The next question is, am I getting a good deal on the place that I want to buy? And then the other question is this the one I want to buy out of all the hundreds that I can see on the market right now? So it really, like, if you think about optimum buying conditions, you said this last month, I've never seen it better than this.
Yeah, it's a great time to buy. Well, a great market to buy in. I think the other issue that we're seeing is there's not enough sales data to kind of really accurately predict like what the price point should be on some stuff when you're on the buying side. So it's like a lot of people are just taking stabs at stuff until something sticks, and then that's
throwing around lowballs.
Yeah, it's setting a new market cap for market price for the area. So it's definitely like a weird time for sure.
It is weird. I mean, I think with all these things, like we said, that there is a kind of shock. I think we're working through the shock now. I think things will hopefully subside over the next couple of months, and the tariff thing will become less of a kind of wild card, and we'll know exactly what's going to happen with it. I think this year is going to be relatively rocky, though. I think the other thing we haven't really mentioned is that, you know, when you have this supply-demand difference, like if you compare, like, if I just went back over the stats for a lot of detached markets you work in, a lot of condo markets, if you look at like the inventory levels compared to last year, they're anything from 50 to 100% higher than they were in March last year compared to March this year.
Yeah, and the sales are close to the same, a little bit down in some areas, a little bit up in some areas, but there's no massive change in sales.
The majority are down a little bit or down, you know, a fair bit. So you've basically got supply doing this and demand doing this. It takes a while for the sale price to actually reflect that, because it's a lagging indicator behind activity. Activity is supply and demand, sales happening, but then the actual data, if more and more people start to sell lower and lower and lower, that's when you start to see the actual prices come down. Then it becomes reported, you know, prices are actually coming down now in the media 3 months later. So prices have slipped. There's a reason why most listings are not getting any showings or getting very minimal showings and getting no offers. It's because it's still overpriced. So come summer, I think we'll have a new kind of pricing benchmark after a bit more spring activity, and we're probably looking at, you know, minor reduction. I think we probably slipped to 3% already.
Yeah, I was thinking like 3 to 7% in some sectors.
At some point this year, I think it's going to be around that, right? I don't think we're going to see any major crashes, but I think we're definitely going to see prices trend a bit lower as buyers hold more power. It's just the way it is. So it's going to be a difficult year. I think.
Interesting, yeah, for sure.
It's interesting is one way to put it.
I mean, we're still thankful for all of our clients and everything we're doing, and we are, you know, doing business every day, and you know, things are fine, but it's strange out there. It's a lot. It's more abrasive. There's just more stuff happening. It's like deals falling apart, deals going together.
You can go to work one day all happy, and then you can kind of go into a pit of depression, go, oh my god, what's going on with this? And then suddenly, at the end of the day, everything's okay again, right? It's a real roller coaster.
It's a real roller coaster, yeah.
So, yeah, that's where we're at right now. But things, like I said, things are still better. I think they're better than last month. The activity's there. Just lots of uncertainty plaguing the market, but for the right price listing in the right area, things are going really well.
And now that it's sunny, everything just is that much better.
Everything's infinitely better. Everyone's infinitely happier out there. So thanks for sticking with us, guys. Thanks for watching again. We'll be back mid next month with another update, and we will see you then. If you have any questions, reach out.
Numbers below.
Thank you.
Thanks.